Air Boys Club S&P 500 family. I wanted to share with you today, this lovely Sunday, this chart I came across. There are many ways to approach investing and value investing, long-term holding and extrapolation, etc. But I think this is the most probably powerful tool I've seen for valuations. I came across this guy who's this value index using current 12-year average inflation rates and S&P earnings. And he came up with this graph basically that shows the intrinsic value of the S&P 500. Okay, intrinsic value is actual worth, how much it is really worth right now. Okay, and if you compare that against the real price of the S&P 500, you can see that here in the last bubble. Okay, this was the Nasdaq bubble that burst in 2000. It was almost 100%. The market was over 100% overvalued before the bubble burst. Okay, as you can see again, it dropped back down to intrinsic value in January 2003, and again the momentum traders blew it up again to about 100% of its value. Okay, of its intrinsic value, overvalued, overinflated, huge bubble. Okay, from the housing bubble that crashed, and then from January 2009 it brought it down way below intrinsic value. So as you can see right now, these points, anytime that you have intrinsic value relatively equal to S&P 500, it's a buying opportunity. Okay, not until you get these extreme divergent prices, bubbles, okay, is where we need to start getting worried about liquidating our positions. Okay, this is where you see the shoe shine boy, taxi man. Everybody's talking about stocks. Everybody's excited. You know, this is the time to get out right here. When you see this huge divergence from the intrinsic value versus the real price of S&P 500. Okay, so we are here approximately, okay, 2014. These are some extrapolations for future intrinsic value prices up until 2018, where this gentleman, he thinks that S&P is going to go like to 2630, and he believes that maybe we'll have a very overvalued I'm sorry, he thinks that the intrinsic price would be around 2630. Now the question is, where would the actual price of the S&P 500 be? Okay, if these are somewhat similar in range, then we're good for a few more years of this bull market. If you see a huge spike in the calculated versus intrinsic value S&P 500 index, we need to start talking about bailing out. Okay, starting to see this type of pattern. Anyway, make a long story short, until we see these huge divergent prices, this bull market has a long way to go. These this intrinsic value index is calculated dynamic. It's calculated about every 3 months with data from, like I said, inflation, okay, earnings, and another number I can't remember, but I'll keep you posted. But remember, buy on the dip with extreme prejudice. We got a long way to go. We're going to make this money together. Have a nice day. Hope everybody bought on the dip last week. It was a violent rebound, and the Bears were slaughtered and barbecued. It tasted very good. Okay, I wanted to share with you guys this, and keeping in line with my long-term thesis of a raging bull market. something I came across. This gentleman, he's a value investor, and he's basically created a formula to value the S&P 500. Okay, basically intrinsic value. Intrinsic value is a valuation tool that is basically you're quantifying the actual net worth of an asset. Okay, and if you look at this graph here, it starts from 1978 January. Every year it goes up, and it's extrapolated up until January 2018. Basically, what this formula is once again it values the S&P 500, and the formula is basically S&P 500 earnings divided by the prevailing rate, interest rate, which is close to the 30-year mortgage. The prevailing rate that he uses to calculate it is the inflation rate. Okay, 12-year. I'm not going to go into detail which one. The latest one was 1.7% average 12-year inflation rate, and in addition to the GDP growth rate, which is about 3% long term. So basically, you add up those two rates and you divide that into the S&P earnings, which is about 100 right now. That's the formula. This is what you get here. So you can see back to 1978, intrinsic value is the gray line. The actual price of the S&P 500 is the black line. And they pretty much, correlate up and down, 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 okay? Definitely when it's below, the price is below the intrinsic value, the market is undervalued. When it's above the intrinsic line, the market is overvalued, okay? And these kind of oscillate back and forth. Now, I want you to note something. January 1995, okay, during this bull market, the market these momentum traders blew this up during the NASDAQ, okay, bubble, and this market was overpriced about 100% over intrinsic value. This bubble went on from 1995 to 2005 years, okay? These bubbles form over a long period of time. This is where you see the janitor, shoe shine boy, your grandmother, okay? Everybody's talking about buy stocks, okay? And this is the time for us to bail. Same thing, okay, this bubble blew up. Market dropped back down to intrinsic value January 2003 approximately, okay? This was a great time to buy here, by the way. And then again, here comes the Feds, dropped interest rates, easy money policy. Momentum traders come in. Got a housing bubble, easy money, home refinance, loans for everyone. Blew it up again to almost 100% of its value. Okay, here's the S&P intrinsic value, actual price. Way overvalued, okay? Again, hype, everybody's excited, okay? Time to sell. The market, obviously, we had the last great recession. The market blew up, okay? Hedge funds blew up. Market way undervalued here. This was the sale of the century right here to get in. I missed it. I'm not gonna lie, I missed it. But it was the start of a great bull market run that we are currently in, okay? And as you can see, this gentleman has extrapolated this intrinsic index out to January 2018, which he believes the S&P 500 will be about 2,630. Now, obviously, that's with today's prevailing fixed interest rate of 1.3% inflation. Okay, and keeping the growth rate of the S&P around, or GDP around 3% long term, which that could change, obviously. But what I want you to focus on here is currently, there is no significant overvaluation. There's no bubble. Markets are priced appropriately. Okay. And we're not going to worry about it if the market's a little bit overvalued, okay? 20%, 10%, even 30%. But when the market gets to be 50% overvalued, 100% overvalued, 50% overvalued to 100, it's time to sell. And this is where you're going to have the strength and the nerves to bail out of this market. It's going to be roaring. It's going to be going up and up and up and up. But we have to have the willpower, the wisdom, and the knowledge to sell. Okay, and maybe even enter some bearish positions. We are nowhere near that phase right now. Okay, blow off top bubble phase, but I'll keep you posted. Again, buy on every dip. This is the bull market of our lifetimes. Okay, happy profits, and I'll see